Hi, this is Julie. Good morning again. I'm going to take a look at bar size on the Uni-Renko and using volume profile for bearings. Everyone is familiar with VWAP. This is volume profile, and it's very, very helpful for markets like indexes in particular, because the index will go on one side or the other of the middle of the range um, over and over and over. So if you know where your central part of your range is, then you know how many standard deviations price has been trading um, from the middle. So you can take a guesstimate of how far price is going to move by these measured moves from the middle of the market to the edge of the range. And that's where you can expect the rotation. So I use the river of gold, the 25% of the value area, and that's very helpful for me to use this big yellow blob as my pivot. I'm old and I need a bigger space to look at to show me what the middle is. In a trending market, price will respond or pivot off of this 25% area all the time, as it does in a lot of markets, where it comes up and hits the edge of that 25% area. This one coincided with my volatility band. Very, very, very high probability area for a touch and then bounce. But that second continuation move failed and price came back up inside the value. So once price does that, going to the top of the range is a very high probability trade. So this leg right here was your sweetheart trade for that leg, for that cycle. So knowing where you are inside of volatility, what market profile is doing or volume profile, having levels to trade to, and comes back, hits the volatility area. This is the same volatility area that's on all my charts. These 6 standard deviations work time and time and time again. And that's where your second sweetheart trade came in on that trend continuation. And so since we already know how far of a range we're expecting, we just do an opposite run. Oops. Look at that. And then you expect price to return where? To the center of that range. So this is the NQ, and this is volume profile and using your standard deviations to the middle of the range. Now, when you have a trending condition, which is rarer, it doesn't happen as often, you're leaving a value area. So here we came straight through the value area and just kept going. So when you get a breakout, which really happened, oops, yes, the breakout happened here. So it was this candle that closed above it. So you would go long here and it went all the way up. That's not as common, but again, it's the same pattern. Once you see your volatility bands leaving a value area, just go with it on any return to the shorter term value areas, volatility areas, I'm sorry, and take the next long direction. There you go. That's what we're trading. So once you know your direction on your higher time frame, that's the direction we want to go. And here is how we get in. So Thank you so much. That's the NQ, and that's my bar Uni-Renko example. Thanks again.